Hey, this is Tony Dalian. How you all doing? Hope you're having a great weekend. I want to take a look at Priceline. Priceline is announcing on Monday morning before the bell. So if you didn't do anything on Friday or before that, you're too late. But I just want to show you something that and this is going to lead into our second in the series on chart reading. And here we have the daily chart of Priceline, and I've got about a year's worth of data on here, and every one of these items over here represent an earnings announcement, and here you can see the next one, and it's blank because that one we're going to find out on Monday. But here's what I want to show you. The last time they announced earnings, back in February, let's go back almost 8 or 9 months, here was where the price was, and on the earnings announcement it gapped all the way up and on massive volume, and that's typical of Priceline. Priceline has a habit of really gapping up. So notice that when it left this level now becomes a significant level, and this was resistance, but now it becomes support because price is above it. So notice what happened afterwards. You notice we had a rise up, and then we had a pivot. Anytime you start making a lower high and you stop making a high, it's considered a pivot and it's a significant level. But look what happens. Priceline tends to backfill, and it backfills all the way to, guess what? This level, which is support. And it's just incredible how it does that, but that's how it works. The market loves to fill gaps, and it doesn't necessarily have to fill them right away, but it fills them eventually. So clearly, if you look at a tendency of a stock to do this, and they almost always do, is when you see this pivot to put on something like a put or a put spread down to the support level, and you do like a monthly, and it just seems to work out. Let's look at the next one. This is the next earnings announcement that happened in May. In this case, we had a gap down, which would mean this level becomes significant, although I didn't draw it. This level becomes resistance as what? Becomes significant as what? It's resistance now because it's now the ceiling. It's above. So what happened was, I guess they didn't like their earnings, so it sort of sold off. It came all the way back down and started consolidating around this support level. The market has an incredible memory, and it's all massive psychology of people who bought and sold at this level, and who's stuck and who's losing and who's gaining. But these levels will work. They could work for years. I mean, it's really incredible. So right here, it kind of started to turn around on this pivot. The market held support in this area. Remember, support is a general area. It's a zone. It's not one particular level. It's a zone. So if it's $1 on either side or $2 on either side, it doesn't matter. It's a zone. It's only when it starts really taking off from that level that it really becomes significant. But as of right now, this is the support level, and it is holding just fine. So it reverses off of it, it heads back up, and guess what? It filled the gap. So it didn't fill it right away, but it filled it regardless. So when you saw the pivot off of support, buying a call, target up to the next level up here, which is now resistance, would have been a good trade. Let's look at the next earnings. Here's earnings. We had what happened. Here's what the run up into earnings. We had a gap up. So I guess they liked the earnings, but it reversed immediately. So anybody that bought up here really got trapped. So it bought up here. We had an immediate pivot on the lower high. We had a drop down. Look, guess what? It filled that gap. So there it is. That's what it does. So I have all these levels drawn. All of a sudden here we had a massive run up, and now this is what Priceline has done. Priceline has moved basically from 1184 all the way up to 1476. I mean, that is just an incredible move. And if you know anything about your geometry, this is more than a 45-degree angle. And in the markets, anything that's greater than 45 degrees on a trend is generally unsustainable. So here at the close of Friday, we had a break of the trend line, and now they're going to announce earnings. So we don't know how it's going to react, but I can tell you what I'm going to do is I will be looking at the gap, because Priceline always gaps. I'm going to be looking at the gap, and I'm going to be waiting for the pivot, and then I'm going to play to fill the gap, either a call or a put, probably a spread because of how expensive they are. So this is a reading charts is an art in unto itself, but the markets repeat themselves, and this is the personality of Priceline, and it just becomes something where the more charts you look at, the better you get at this stuff. Let's take a look at another stock. Let's take a look at Facebook. Oh, actually, before we look at Facebook, I want to look at IWM, because if you notice in the trading room, we have IWM I talked about, and you could go back and look at that screenshot that I posted. Remember I said here is our level, and I'm waiting for IWM to break. Well, at the close of Friday, it broke and closed above our support level. And when it closes above our support level, we may be on the verge of a breakout. So what am I going to do? I am going to look to see, it's going to play around over here because there's a lot of stock that was bought and sold here. I expect it to come back and touch this level and test it again, but then I also expect it to take off from there. I think we're going to be on a pretty significant bullish run through the end of the year, and we've got plenty of room to go. Here's the high is 129. We're at 119. We've got a good 10 points to go. And yeah, we're going to have a couple of support and resistance levels along the way. Like here is one right now. Let me draw that price level, because that is going to be a significant price level. And there it is right there. Right there. So our first stop, if it breaks out, it's going to go and pause somewhere around 122. And then here's the next pivot. And look at how it held over here in a couple of places. And then of course the top is going to be the next. So I've basically drawn your channels for you. And you could see how these work. So I'm going to take it to, my first play is going to be up to the 122 level, which I think should be very easily hit. And then I'm going to look for it to move up to the 126, 127 level. So I'm going to play this with a call spread, and I'm going to have, let's say, multiple contracts. Let's say I did 5. If I did 5 contracts of calls and sold some calls up here and created a spread, as it moves closer to the 122 level, I'm going to buy back some of those short calls. So I'm going to have more long calls than short calls, which means that I will profit beyond the spread. And that's called a ratio, and we'll learn more about that, but it's so easy to do. Just basically buy back some of your short calls, which leaves you with long calls, which is perfectly fine. So that's kind of the plan, and you'll hear about that when it happens, but I'm just giving you an advance notice. And this is how it works. I got a breakout that I was looking for. Now I'm going to wait for it to test it or see if it's just going to take off from there. But I expect to have, unless we have a reversal where it breaks down, I expect to be able to put on an IWM call spread very shortly. Now, the next thing I'm going to introduce is the idea of a trend line. So let's get a stock. Let's look at I'm going to try the SPY. Okay, so here's the SPY. What a trend. Now, what we've been looking at is significant price levels, and they are horizontal price levels, but I want to show you identifying a trend. So basically a trend is where you take a significant low, connect it with another point, and then just let the line extend. So here we could grab a trend line. Here's a low, here's the next low, and just let it run. Now what have I done? I've connected 2 lines. 2 lines is significant. 3 touches, 2 touches are significant, 3 touches are even more significant. So I would expect now this actually becomes a support line because it's a trend line. Am I the only one that ever seen this? I guarantee you thousands of people have this trend line drawn on their charts, and they're using this as support to buy a put or go short when it breaks this, or to use it as a bounce and take off again, because typically stocks pull in, take off, pull in, take off. Nothing goes up and down in a straight line. So here is my trend line. Now I'm going to draw another trend line for you, and that's going to be connecting two tops. So what I'm doing now is this trend line and where they meet right over here, this is going to be resistance because I have 2 points right here, and this is going to serve as resistance. So I've got a little bit of a tight range. I've got the possibility of a breakout, and once we clear 213 and our all-time highs, there's nothing but air above here. So these are things that we're looking at, and this is technical analysis, guys. This is the most fascinating part of charting. It's the art of reading mass psychology on a chart. Let's look at another one. Let's look at Netflix. Okay, I've got a lot of things drawn on here, but you can follow along and really see everything that I just talked about on a chart, and you could do this immediately. Here's our first price line of support. Notice it's double. This is called the double bottom when you check 2 points. And then over here we had a couple of touches. So we have basically, you could consolidate this into one line because, like I said, support and resistance is a zone. It's not an actual level itself. It has a little bit of a range. Look at the consolidation, the tight consolidation here of price. So here we go. We bounced off it. We took off. I had more than one touch. I was able to draw a trend line. So as long as price stays above this line, I don't have a change of trend, and I could basically stay long and stay here. Now, here is my next level of resistance. I know I'm going to have a little bit of trouble with Netflix above here, but once it breaks this line, I think we're pretty good to go to anywhere from 127 to 129.29, the highest. So you use these levels because they repeat themselves. On the downside, I've drawn a downtrend line here that if we break here and we break here, this is going to serve as a little bit of support. If it breaks through here, we'll probably come down and test this 97 and 98 level. What I'm showing you here is basically the significant levels of support and resistance on a price chart. By drawing these, and it just takes practice. Just look at a lot of charts, take 2 points, connect the line, draw them, and look and see how price respects that level as support or resistance. It's always support on the bottom, think of it as the floor, and it's resistance on top, think of it as the ceiling. So we have price levels, and then we have trend direction. And when we have the trend direction, we're clearly in an uptrend now. Draw your trend line, and that trend line on the bottom acts as support, and it acts like resistance above. So basically, this was a valid line here, and we blew right through it. So it did not respect this resistance line. There's nothing that says it has to. If there are more buyers in there and the market is bullish, it's going to take it right out. We will have a little bit of resistance here on top, and then we're going to go straight through. So I'm getting ready to wrap this up, but I just wanted to tell you again, if you don't understand the logic behind it, think about it this way. We bought over here, market's running up, market's running up, market's running up. So people who didn't get in over here are pissed because they missed the run up, and they wind up, they see this big candle here, and they say, darn, I'm going to get in here, and they go ahead and buy right here. Boom, the market's reverse on them. They're trapped up here at this level. So once the market retraces and they see they're down 6, 8, 9, 10 points, this is stock now. This isn't options, right? These are stock buyers. The options are derivatives of the underlying price. So the underlying price is a heck of a lot more important than the option. You understand price, you'll understand the option. But price is always more important. All they're doing right now is wishing and hoping that they get back to even. And they're stuck up here. Price is going to come back up here. When it gets to even, they're going to breathe a sigh of relief. They're going to sell and say, thank you for letting me get my money back. That's why this is resistance, because there is going to be stock to sell up here. Does that make sense? Because that's really the psychology and how the psychology works. And then people here who bought over here, once they have the trend line, they're sitting on profits, sitting on profits, sitting on profits. Once we break the trend line, they're afraid that they're going to give the profits away, so they do some selling. Once it drops to a certain level, The buyers are going to say, here's my chance to get back in, support, boom, up it goes again. And that's why you have the ebb and flow. Profit-taking, pullback. Buyers coming in, profit-taking, pullback. Once you start, you don't make the higher high, then you may have a trend reversal. So I want you to sit and digest that a little bit. I'm going to stop right here, and let me know if this is helpful for you, because once you can read charts, you can set your option levels, your spreads, you know when to buy, you know when to sell. You don't want to buy call. You know, it's just something that gives you a lot more clarity. And again, we're always looking for that edge, and this is one way to really find it. Okay, hope it helps, and look forward to seeing you guys Sunday night. We can talk about this if you have any questions. Later.